Hello and welcome to my channel of investment and income. There has been a little bit longer gap between my last video and today, but there is a reason. The markets were moving smoothly. There was not much to add in this period. Now today I have added a topic for which I have received some inquiries, but over a period of time I have observed people asking, supposing if we don't want to be very active in the stock market, then what do we do to earn a steady income but in a safe manner? So the today's topic is substitute to bank FDs. Now let us take the base of bank FDs. People invest in bank FDs because of two or three reasons. Number one, it is convenient. People usually bank with the banks which is near to their place. Second, they put their money in the banks they trust. Except for those banks like the cooperative ones which you have seen going bust, otherwise the banking system is fairly safe in India. People also invest through FDs because they get a steady monthly income. Everybody has expenses to take care of and they want a steady income, for which they at times get scared. The stock markets go up, they go down, they are not sure what will their investment be, positive, it will be negative. Mutual funds at times also go negative. So bank FDs are safer for those kind of people. Now today's topic, substitute to bank FDs, covers a lot of movements of the market also. Now the question is there a way in the stock market which can be made very safe, not cumbersome, and yet we get a return better than the bank FDs? The answer is yes. The answer is yes because the investment is in the index. Yes, I will repeat once. The investment is not in stocks, any particular stock, but the investment is in the index. Is that possible? Yes. You can purchase index, you can sell index. There is a method to it. There is a allowed instrument for index trading. First question is, how would the benefit arise? For that we have to understand the base of the index, the formation of the index, and the journey of the index of last 35 years. That I have explained through the graph as follows. Now that you have seen the graph, I will once again come back to this topic of index and differentiation. Bank FDs can be liquidated practically any time in any emergency. The examples were taken was only of the liquid assets and not of any real estate. Other than the bank FDs, if your investment is in PPF, it is also giving a fairly good return. But there are a lot of conditions in PPF withdrawal of your own funds. So all in all, bank FDs are one of the best choice. That is why people make. But since you have understood the graph up till now of the working of the index, you will presume or you will agree that investment in index is also safe. I am not going into the micro level detail how it is done, because this basically channel and all program is to bring an awareness, tell the people actually in a broader sense what is stock market, what is investment, how best it is done. So I'll keep this to the outline of investing in index. Now, having understood, investment in index can be done even of 1 unit. Like you buy gold 1 gram, you can invest in 1 unit. You can invest in 2 units, as much as your financial stability allows you at any given time. We have seen the graph of index going up since the last 35 years, so it is fairly safe to assume that the return is going to be very high. I'll give you one example. This is March. I'm recording on the 11th of March. Since 1 year, it was exactly March last year that the market fell because of the COVID pandemic and its panic. Between the low of March 20 and today, March 2021, the index has moved up 100%. Yes, I will repeat 100%. From the Nifty, from the low of about 7,500 odd levels, has touched 15,000. So if you would have invested 1 lakh rupees in the index, for taking an example, in the low of March 2020, today that 1 lakh would have become 2 lakhs. Does your bank FD give you that much amount of return? The bank FD return, say, is from 5.5 to 6.2%, depending whether you are a senior citizen, depending upon what time, what tenure you are keeping the FD, and what amount and what age you are. Now that is a very meager return, because many people are finding it tough. Those who are dependent upon invested bank FD's money to run their household expenses are really finding it tough. And if you take the tax amount applied to the bank FD, and if you consider the inflation, the return on bank FD today is practically negative. मतलब 5.5-6% रिटर्न मिलता है और खर्चा और महंगाई उससे ज़्यादा बढ़ती है. So one of the safe ways to invest without going into the hassles of stocks, its accounts, its ordering system, is purchasing index and selling index as an investment. Now, how that is done, all the details will come afterwards. Today's first priority was to bring to you in the broader sense that it is possible. Now I gave you an example of 100% return of index from the 2020 March low to 2021 March. Forget that it was an example, it cannot happen every time. Forget the 100% return, but safely assume that you will get 3 times to 4 times more returns by investing into the index in comparison to bank FDs. Does that mean that you completely shut your bank FDs? No. A part of it can be liquidated and be invested in the index, and a part of the money which you go on earning or your surplus, you can go on putting into index, like you do an SIP in the mutual fund. There is a way to do it. There will be another chapter for it. This is not the right forum I am explaining in the broad spectrum. So assume at least 3 to 4 times returns from the index investment compared to bank FDs. Thank you very much. Any of your queries, and I know there are going to be a lot of queries on this, I'll be happy to answer to you. Goodbye.